Morning, Tom.
Good morning, Pete.
Everything well?
No complaints.
Excellent. How are our markets today?
Well, we'll open in negative territory by a margin of around 0.25%, Pete, perhaps a little bit closer to 0.33%. Yeah, US markets saw a push lower in the final stages of trade, bearing in mind that they were recovering from a pretty stiff sell-off in the early part of the session. The point to make here is that the S&P 500 broke quite a historic winning streak. It had risen for 9 consecutive sessions, couldn't make the next leap, and it finished lower by around 0.2%. The Nasdaq down 0.75%. So the markets, you could argue, are positioning ahead of the US Federal Reserve's decision on interest rates later on in the week, which will obviously create an expansive canvas, if you like, for the conversation around the economy, inflation, and what the Fed is intending to do in the near to medium term. And given the fact that we actually saw some better than expected news when it came to activity in the US services sector, this put the Fed meeting in stark relief, Pete, because these numbers were better than expected, but within them you saw a much higher than expected reading on inflation through price pressures. So this will be precisely the sort of catalyst that might see the Fed delay the prospect of any further rate cuts, and that will work against the market. So that's firmly on their mind at the moment. Elsewhere, one of the big stories in terms of the tariff headlines last night is the Trump administration's intentions to apply 100% tariff on films that aren't made in the United States. So that saw some selling pressure come to bear on producers of film content like Netflix, down by the most part of 2%, Paramount down by a similar amount, Warner Brothers down around 2% as well. So that was quite a talking point.
Okay, thanks, Tom.